Hi everyone and welcome to today's morning report on Tuesday 12th of July with me, Richard Perry, market analyst at Hand Tech Markets. We've got a positive market outlook pretty much across the Forex majors today. We've got this generation of sterling strength, and that's come on the back of the announcement or the developments yesterday that Theresa May is now going to be the next UK Prime Minister, and that sort of takes out a whole load of political uncertainty and has allowed to generate a bit of positivity for a change for sterling, and that's driven sterling around about 1% higher today, and it's sort of filtering across the board because also you've got on the back of the election victory in Japan for Shinzo Abe at the weekend, and that sort of again is helping to drive the risk appetite as well, because it sort of reinstates his sort of ability to initiate his 3 arrows and extend the policy, and certainly it seems as though that this is going to help risk appetite generally speaking as well, because looser monetary policy means better for risk appetite. So what we're seeing is across the board on the Forex majors a shift into risk out of safe havens, and across the equity markets we've seen a similar sort of move. But first of all, let me just show you the impact that that's having on the dollar. Strongly low today, which is interesting, and the treasury yields are starting to rise again as well. So that is helping to drive risk appetite. Oil price is still sort of holding on to that breakdown, isn't it? 45.83 on WTI and 46.70 on Brent crude. So those two big breakdown levels are still intact, really, and that's not all that great for generally. But just for now, we're seeing these moves to the positive side on risk appetite, and that's helping equity markets higher. Wall Street incredibly breaking out to a new all-time high on the S&P 500 yesterday, closing above that 2135 level, and certainly looks to be positive. But it's interesting because today we're seeing FTSE basically flat on the day. FTSE has been so strong as the sterling has been sold off massively. But now we're seeing sterling rebound. You're seeing a little bit of underperformance of sterling against the DAX, which is up 0.8%. So that is an interesting turnaround in that, and it'll be interesting to see how long that lasts for as well. So what are we looking forward to today? Well, again, there's not a great deal of economic data today. You've got Mark Carney, who is testifying before the House or the Treasury Select Committee at 10 o'clock on financial stability, and that comes just 2 days before Carney is possibly going to also cut interest rates. Into the afternoon, you've got the US JOLTS jobs, which is at 3 o'clock, and also FOMC's Turullo and Bullard also speaking. But I think generally speaking, the markets are fairly set for this improvement in risk appetite that we've got today. So that takes me to my chart today, which is Euro Sterling. Are we seeing a bit of a turnaround on Euro Sterling? It seems as though we've had sort of 3 candles in a row of mild correction, but now we're starting to just accelerate a little bit to the downside. I've put the Fibonacci retracements in of the Brexit move, and 23.6% is 83.80, and that is the top of a support band that comes in between 82 figure up towards 83.80. So it could quite easily see 83.80 today. Now you're seeing also these momentum indicators correcting. The RSI having a crossover, near-term crossover sell signal, or also the stochastics having the crossover as well. MACD lines coming back together. So all these momentum indicators just beginning to show a bit of a turnaround. Here we see the hourly chart. You see a little near-term top pattern that has a neckline around this low of 84.90. So you can sort of measure. I mean, it depends on how you really want to do it, really. I mean, you could do a very conservative target of around sort of 90 ticks, but generally speaking, you'd probably take these highs here, 86.13, which is sort of around 120 ticks of downside, from 84.90. 130 ticks. That's what 82.60. So again, that's back into the middle of this this consolidation band that we've seen in the last couple of weeks ago. So it certainly looks as though we're having a correction now. These momentum indicators on the hourly chart more corrective, far more corrective on the hourly RSI, MACD lines and stochastics. Looks like little rallies are being seen as a chance to sell possibly now. That near-term neckline breakdown, 84.90, is becoming a basis of resistance already today, turning lower. So that is your neckline resistance, 84.90. And then you've got a series of resistance really. I suppose you could argue 85.20 is a level, but generally speaking you'd be sort of more up towards 85.80 with that reaction high there. But a series of sort of minor lower highs is continuing, so selling to any sort of rallies you get as the sort of sterling just unwinds a little bit. But it certainly looks as though near term we're going to see a bit of a sterling rally, and it'll be interesting to see how far it goes. But as I said, this 23.6% fib level looks fairly prime at 83.80 sort of level, which is, as I said, the top of that congestion, that old consolidation pattern. So I wish you good luck in your trading on Euro Sterling today and across the markets, and I'll speak to you later. Thank you.